Welcome back to Barry Chow's YouTube, and on this video we're going to learn about CSL Limited. Yes, CSL Limited, or in America CSLLY. Now this stock is a company here for therapeutic, influenza and so much more. Let's check out and let's do a bit of a stock analysis on CSLLY or CSL in the ASX. Check it out. Remember to subscribe and like the channel if you like this video. Let's get to it. Yes, CSL. What is CSL? CSL Limited is an Australian based biotechnology company engaged in developing and delivering medicines that treat people with rare diseases. It offers treatments for people who are living with conditions in the immunology and neurology, as well as cardiovascular, metabolic, respiratory, and so much more. They also have a couple of subsidiaries. They have Securius, that looks after the influenza, so anything to do with the pandemic, vaccines, Q fever, and anti-venom, as well as manufacturing non-plasma related biotherapeutic products. And they also have CSL Behring, which develops plasma therapeutics and also does some non-plasma products as well. How many employees does CSL have? Well, it has 27,000. And these for the American fans out there, this is on the OTC platform to buy, as I said before, on CSLLY. And when I look at the financials, I'm going to do it in US dollars. So the Australian public, you'll have to look at the Australian dollar, but it gives you're still going to get the same content out of this video. What can they do to become more rich? That is a big question. How can they become more rich? Well, they have just done an acquisition, so they are trying to make more money there with the acquisition. So they really are trying to make some decent money from the acquisition, which which is very good for the stock to really try and make some money off this purchase of Viva Pharma. Sorry, that's what I was trying to figure out. Viva Pharma is what they brought. So obviously they will drop their cash flow down a bit, their free cash flow down a bit. So their free cash flow is now 1.5 billion, so down 36%. So they took a bit of a knock by buying this thing, but they're obviously trying to grow. And with a PE ratio of around 40, this company is trying to grow bonanzas. Okay, they're absolutely trying to grow. And if we look at the financials, this will give you an idea of where this company is heading. The revenue in 2018 was 7.8 billion. It's gone up to 10.5 billion US dollars. If you look at the net income, it's gone from 1.7 billion to 2.25 billion. So it's a bit of a not as big a jump there. So there's a bit more expenses involved, and obviously buying this business hasn't helped this year. They got a very small dividend of 1.1%, so that's something to look at. It's a solid company, not going to go anywhere. Being like an Apple sort of company in terms of consistency, may not be a $1 trillion company obviously, but if you look at the stats, it's a pretty solid company over the years. And over the last 5 years, the stock price has gone up 100%. So every annually, you're getting 20% increase in the last 5 years. Will they continue? That's what we need to find out. Total assets has increased from 10.7 billion to 28.3 billion, so that's very good. And the total liabilities has risen as well to 6.6 to 13.7, but it's less than half of their total assets, so they're going pretty well. This is a good, well-oiled machine. So as I was saying before, what do they need to do to get themselves into more property? It's obviously operating expenses. How do they cut their operating expenses? That's something they need to look at. Finding the next big product. That is obviously they're doing all this research to find new products. If they can find a new product that saves the world, if they can cure cancer, if they can cure, if they can cure COVID completely so you can't get it again, like something absolutely ridiculous like that, this is how the stock price can go to the moon. Whether the likelihood of it going to the moon is not that likely, but this is a stock that will continue to grow over time. I don't think it's going to be a world beater, but it's obviously something you can look at. If I was looking at it for it to double again, I think for me, you'd be waiting about 7 years, because I think there's going to be a slowdown, even though people are saying that the therapeutics could go up if it's a bad economy, but I think it's going to drop, and then you'll see the steady increase again. But I think it's going to be a bit of a slowdown for the next year or so. So to me, is it a good time to invest? I don't think so, because it's not at its total high, but it's pretty high up. I'd want to see a big discount before I'd even look at investing into this company. But if you've got a long-term horizon, then I think you will do fine. I don't think it won't do a 10x or anything like that for you. But if you want a solid company and sit and forget about it, this is one of the companies you can definitely look at doing with CSL. What would make me buy CSL? That's what you want me to ask. What would make me really consider buying this Australian stock, or for the people in the US who want to diversify into overseas? To me, it's a game changer. Even though it's very solid and it's making money and all that, for me to seriously look at buying it, I would have to come up with a game-changing product. And at this stage, I haven't seen it, but obviously they're doing a lot of research and putting money into that research. So if they ever do find something, obviously the price would have already gone up, but I'm not worried about that. I'm really wanting something that's going to really make me go, boom, this stock's going to 3x. At the moment, I don't see that. I think, if you're looking at the stocks that are in a similar sort of, this company's pretty solid and know that it's not going to disappear, I think you'd have to look at the one that's going to 3x from here for me easily. Facebook. I think Facebook is something you should do more research on. But back to CSLLY, to me, this is a watch at the moment, but definitely you can't go. Generally you can't go wrong with health stocks over time. They generally do well. They're not world beaters, but they're consistent. They're like an index fund sort of style investment. So if that's something that you like to do, this is definitely a stock you can look at adding to your portfolio. But to me, it's just too rich a valuation for me. I don't think it's super expensive, but because this is a growing stock, so there is possibility for the stock to go well. But for me, it's just a wait and hold. Well, I hope you enjoyed this video and got some great information out of it. Remember to like and subscribe to the channel so we can spread the love of finance all around the world. Take care out there.